You sent that memo 2 weeks ago, and things have changed dramatically since then, and even in the last 24 hours. Are you even more worried now today than you were then?
Well, thank you, Emily, for having us on the show. We sent that memo because we wanted to signal to our founders that they should take it seriously, and we want to sort of go back to first principles. And the first and foremost, this is a health crisis. So we want everyone to take care of themselves and their family and their employees and their community. And then second, as a business leader, we have to take this seriously, and we need to focus on survival. For many of our founders, that means focusing on their cash flow and understanding how much cash they have to get to the other side. And I think we will get to the other side. At Sequoia, we've been in business for 47 years. We've seen many crises. Every crisis looks different. This is first and foremost a health crisis. The last one was a financial crisis. The one before was 9/11. And we will get to the other side of this, but in each and every one of these, the most important thing is to stay healthy, not to panic, and to focus on your cash flow.
So let's talk about the financial crisis. You steered Zappos through that as COO and CFO back in 2008, which was the same year that Sequoia also sent a famous memo, RIP Good Times. Do you think what we're seeing now is going to be worse than the financial crisis?
I'm not an economist. I don't try to understand those particular details, but I can also tell you that we have a lot of people working on this, meaning scientists trying to figure out how we get to the other side of this. I'm hopeful that in two months we will see whether we handle this as well as China did, or Hong Kong did, or South Korea did, or maybe not. And I'm hopeful that we are going to get to the other side of this. In terms of the Zappos,
okay, so then
the other crisis that hit Zappos harder was actually 9/11, when sales went to zero for a few weeks. And we knew exactly what to do during the financial crisis because we saw sales drop significantly as well. And again, each one is different and the magnitudes are different. But we have examples from around the world where we can see ourselves getting to the other side in 1 or 2 quarters.
So then I understand that, you believe this is a health crisis first, but what is your message to entrepreneurs and to companies right now about trying to ensure the survival of their business?
For leaders, for business leaders, it's important to first focus on your health and then secondarily on survival. And again, back to understanding how much cash you have. In our memo, we mentioned to think about, do you have enough cash to last 1 or 2 bad quarters, if not longer? It'd be nice to have more than 12 months of cash runway, if not more. And if you are in a situation where you are in that shape, then great. If not, then let's think about all the right trade-offs that you need to make to get to the other side of this.
So let's talk about Airbnb, where you are an investor. Sequoia is an investor, a company that's been hard hit by the disruption to the travel industry. This is a company that said it intended to be public by the end of this year. Given the uncertainty around Airbnb's business model right now, how does this impact Airbnb's path to the public markets? Do you still think they should go public this year?
Well, they're in a quiet period, so I can't comment on that. They did put out a statement that they intend to be public in 2020. I think the main thing to focus on for them is I have great confidence in the management team that they are looking at what they need to do to get to the other side of this. Travel is hard hit, but travel will rebound. We are a society that is social, we are aspirational, and we will come out of this at some point in time. And the conversations around Airbnb are all about making sure we do the right thing for the guest and the host and for the employees and for the community and for the stakeholders. And so they're being very rational about what they need to do to make those trade-offs.
What about DoorDash, another Sequoia company? We broke the news earlier this year that DoorDash in February had filed paperwork to go public. This is a company that has continued to make rent by subsidizing the business in part on cash from Sequoia and others. Can DoorDash continue to move forward towards becoming a public company? And how does this situation impact their cash situation?
I think so again, I can't comment on the performance of the financial performance of the company since they are in a quiet period. What I will also tell you is Tony and his team are also very, very clear-minded. And I think that they are very, very focused on making sure they also get to the other side.
What about M&A in this environment? You know, there's been speculation about, and I know I'm asking you, you know, some sort of privileged questions, but, you know, hoping you can give us some view on them. You know, you're also a personal investor in Uber. There was some talk about Uber potentially acquiring DoorDash. Could something like that happen in this environment, or might that make sense? And might we see other instances of tech M&A as a result of this?
I think the M&A environment is ironically correlated with how people feel about their stock. And so M&A, in times like this, it's probably the best time to buy. And so I encourage companies that have good balance sheets to think about whether they should focus on M&A, but they're going to be, all of them are going to be focused on survival first and foremost. And so I suspect that M&A will come to a bit of a slowdown. And then when we see ourselves coming out in 1 or 2 more quarters, we probably will see more M&A when people get to the other side of this.
Let's talk a little bit about WeWork, which sort of sucked a lot of the air out of the tech news cycle over the last several months leading up to this. We've also gotten news that SoftBank might be backing away from a potential bailout of WeWork. Of course, SoftBank came in to Silicon Valley guns blazing, a lot of capital. What's your take on, you know, their ability to continue to do that, and how potentially SoftBank backing out of commitments impacts the tech ecosystem?
I think so. We're not shareholders in WeWork, so I'm not familiar with that particular situation. I do think that that's why we sounded the alarm 2 or 3 weeks ago. I'm trying to make sure you get the cash that you want and need to get to survive. We may see more of these, but I think a lot of funds have plenty of cash to invest in. We're open for business. And back again to being calm about these situations. If you fundamentally have a good business, I believe you will get funded. If you fundamentally have a business that is not working, I think it's a good time to reassess and make sure you have a fundamentally healthy business.
Meantime, Alfred, you've got a lot of LPs in the health sector, the folks who are on the ground trying to find treatment, therapeutics, working towards a vaccine. What sort of activity are you seeing there, and is any of it giving you hope?
Yeah, we're very, very fortunate to work with many LPs that are on the front lines of this, including Johns Hopkins and MIT and Boston Children's Hospital, including the medical schools at Stanford and Harvard. So I think I would say is like Johns Hopkins is coming out with a test that they believe that as early as April, they can test 1,000 people a day. I think we are seeing the scientific community come together and try to help us solve this crisis. And we're very, very hopeful because of all of their work. And we're very privileged to be working with them as our LPs.